Bitcoin saw a massive pump just yesterday, and we are now looking at a very, very crazy situation. Everything is collapsing with the US banking system as well. And I've actually got a very special guest here, Dirk Hartig. This is one of the guys I had on the show previously. You guys loved him. Out of all the guests I've ever had on the YouTube channel, this guy has been probably the most loved. How you doing, mate?
Hey, great to be with you today. Great and not great to be with you here today because the circumstances, of course, make it a little bit special here. Nonetheless, happy if you joined us here today on this video. And we're going to try to shed some light on the situation for you.
Yeah, and I just want to highlight that Dirk actually heads up the education side of Prime XBT. You can check him out with the links down below. You're getting up to 7K when you sign up to Prime XBT and free bonuses. You're going to see a lot of cool stuff in this YouTube video. And what I want you to be aware of is that if you see anything that you're like, you know what, I want to trade this, keep in mind that you've got free cash available to you that Prime XBT is going to be giving you as well. Now, I just want to start off with the charts just a very little bit here, taking a look at what's going on, because we've actually managed to find support off a very important macro level. We're now finding resistance exactly where we would have expected at 22.7, pulling back a little bit. One of the ideas I had is that we could be range bound a little bit, but what's also very interesting is what's going to happen in the next few hours. Just before we started to record this, Dirk, you were talking about how, potentially, seeing some bank runs, beginning to happen on this Monday morning in the United States, and also some things resting on Joe Biden. So I want to hear what your thoughts are on that, and kind of relating that to how this could affect the price of Bitcoin as well.
Yeah, I mean, a lot of has gone down, especially in the last, I think, 4 days since Friday, late afternoon. So we saw Silicon Valley Bank collapsing, a lot of people and companies that cannot reach their money, 200 billion US dollars we are talking about here. And this is basically putting a strain on the US banking system, because the question now is the US government going to save those depositors of a bank or not? And a lot is going to depend on today. Somebody, I think, is going to be probably Joe Biden addressing this in a good way. Because if he doesn't address it in a good way and in a way that transport confidence, and that after that you feel like, okay, my money is safe with my local bank that I'm having my money with, what we could see then is really bank runs. People running to the local banks, withdrawing their money into cash, and being on a fractional reserve banking system that we are, this is a death blow to the system. So I'm wondering right now, are we going to witness the falling apart of the US banking system maybe?
Yeah, and if we do see, I want to talk a lot about that and relating it back to 2008. If we do see something fairly concerning happening with the banking system, where a lot of bank runs happen and banks just can't give the cash, right? Because that's what we mean when we talk about this, right? Is that banks don't hold all the money that you're depositing. I saw an interesting tweet, by the way, the other day. It was like, when you deposit money in your bank, it's like you're investing in a hedge fund that you don't know anything about the hedge fund. Which I thought was, like a very novel way of saying it, but also pretty accurate. But how would that? What are you thinking that would do with the price of Bitcoin? I wanna take a look at this maybe with some charts as well.
That's a really good question. So I think it could go two ways, or it's probably going to go two ways. For sure, in the beginning, we would see like the price of Bitcoin going down because it's so closely related to what the US stocks are doing, especially S&P 500, the Nasdaq 100. And long term, and maybe we've seen some foreshadowing of this already, I think it was yesterday, we could actually see that people or companies also that do not trust the US banking system anymore, they are going to look for alternatives. One of those alternatives being Bitcoin. I mean, we've seen yesterday, out of nothing, the price suddenly go up by like $1,000 US. Where did this come from?
Signature Bank was closed, and immediately Bitcoin pumped. It was interesting.
Yeah, and I talked to a lot of friends of mine who are running US startups, who say, like, what we are doing right now, Dirk, is we are moving our money to the big 3 banks in the USA that supposedly still are safe, and we are thinking about alternatives. Now, they didn't specifically say we are thinking about Bitcoin, but I mean, what is the alternative, Really, if you want to at least be outside of a bank, if you gold or Bitcoin, but gold, is kind of difficult in terms of fungibility.
Yep. Interesting. Well, see, that's what I was looking at. Is it was very, very interesting because a lot of the time, and actually, like during, for example, the Silicon Valley Bank and the one that went before it, Silvergate, we were either like on this dump or like around here in these horrible ranges. You know, so it kind of looked like at the very beginning that Bitcoin wasn't going to see much sunshine, but then yeah, we got a really, really interesting rally here right as Signature Bank was closed. It was actually very interesting. You can trace it down to the 5-minute, 1-minute time frame. It was right here where the pump actually started, and when Signature Bank was like when it started to break along Twitter and so on. That we're looking at, you know, a closure from the state, and now just kind of range bound a little bit. Are you able to pull up some charts and tell me what you're seeing here?
Yeah, sure. Yeah. If you did I pull it? Oh no, sorry, I didn't pull it up. Yeah, I did already. All right. So I mean, if we look at it, it's for me really interesting, and in two ways actually. You know, it's like interesting in a way you just said from a more fundamental news perspective, but also the area where we bounced off was here exactly the 200 days moving average, and we bounced off for all you chart heads out there with a hammer, you know, to the north, and really pulled back here almost to 23,000 US dollar. Well, not quite 22,600 it was here. So that's really in my it surprised me. I'll be very honest with you that this was happening, but I kind of like to see that because it undermines my hypothesis that Bitcoin is going to become more and more of a reserve asset as more and more crises are going to struck the fiat system. But of course, it also scares me because I don't want all of this coming down, you know, just within a matter of days or a week or something like this.
It is moving very quickly. You know, when the 08-09 crisis happened, I was like 7-8 years old. You know, but I was asking a friend yesterday. I want to know your thoughts on this as well. It was like, is this like what happened? You know, like what 15 years ago? And he kind of just told me this is bigger. You know, what do you think
this
about
is bigger. That? Yeah, I agree. I remember very well back then I was working for a bank in 2008, and that moment back then was kind of like, oh my God, what is happening here? What is happening here? You know, like, and you had this kind of sense of impending doom, but because it never happened before, something like this during our lifetimes, at least, you also thought like, I don't know what to expect. And at least here in Germany, I very well remember back then still, there was Angela Merkel, who went, our chancellor back then, who went in front of a microphone and said something to the likes of, the deposits of everybody within banks are safe. And this one sentence changed everything, at least in Germany, that stopped bank runs that could have happened. Now, back then, of course, we didn't have, we had social media already, but not to an extent that we have today. So things were not spreading so fast on a personal level yet. And the second thing we didn't have was an alternative again. Because of the banking crisis back then, Bitcoin was invented for all that matters. And to my surprise, what I see within my networks of bankers or banksters, if you want to call them like this, right now, I think they don't take this like really as severe as they should take it. It's kind of like, oh, okay, another bank is failing right now. But what they don't see is what is happening on a local level in the USA. That like your mama and papa residing somewhere on the countryside in the USA, they're getting ready to go get into their car this morning, drive to their bank and withdraw their money. And if this happens like 50 million times today, we are going to see the shit coming down. Either we are going to see the collapse of a US banking system, or we are going to go into a direction of a 1984 dystopia where the US government has to say something like, yeah, we are restricting your withdrawals of cash daily to, I don't know, like 200 US dollars for everybody worldwide. In any case, it's a case for Bitcoin.
Wouldn't be the first time the US government did something like that. I'm reminded of the gold seizures in the 1930s.
Yeah, 1930s, exactly where it was forbidden to have gold. Actually, you had to give your gold and turn your gold into the U.S. government. Actually, in 2008, if I remember correctly, we had something like this too. I'm not too sure about this, so please don't quote me about this. Where people were restricted from withdrawing too much cash, but again, it's like things like this can take a life of their own so fast nowadays due to social media. It can spread like wildfire. And if it starts in the USA, it can spread very fast over the whole world. And then there's no government that can change that anymore. I mean, imagine also the damage to trust this might have. Why should I, if the US government does something like this, restricting me from getting my money, why should I ever trust the US government again with something? Why should I ever trust the German government or wherever this is going to come down again? I don't just want to project this at the USA, of course.
Of course, yeah. Yeah, and if we do see, some sort of collapse, and the crazy thing is we're talking about something that could literally happen like today or this week.
It's crazy.
Yeah. I'm talking about it like it's a hypothetical. It still is. I don't like. We don't want to. No one's trying to say we want the banking system to collapse. To be very clear, only psychopaths would say something like that.
Yeah. You really, you have to understand out there. We don't want to fearmonger or something like this. It's really hypothetical, and I pray to whatever God, that I'm wrong about this, and that everything will turn out great again and go back to normal in a couple of days down the road. But we gotta be prepared.
Of course, and if that does happen, on the parallel universe, if it does happen, lots of bank runs, they can't do it, people get very scared and so on. Are we looking at more bailout? Because I mean, so far the position that I've seen from the U.S. government, and this is changing very quickly. Like new things, new articles, new bits of news are coming out like very, very too quick to keep up with. But the latest I've seen is that the U.S. government is taking a stance where they are not indicating that they're going to be doing any bailouts this time. Do you think they will? And if they do, what do you think? Because for me, I would imagine that that's going to come in the form of more inflation.
Yeah, I think there's going to be bailouts. I think there's no other option really to do that. But the bailouts are going to be hopefully for the creditors. So for the people that deposited money with the Silicon Valley Bank, whether it be companies, startups, I think on a personal level, like individual people having accounts with Silicon Valley Bank is actually just a minority there. That doesn't make it a less bad, of course. So we might see a bailout for that. What we are actually hopefully not going to see is a bailout for equity holders, like shareholders of a company.
Okay, and last time when we had when we had these kind of conversations, we were talking about inflation as well. Obviously that would potentially come in the form of some more government printing and then inflation kind of taking off again. What are you seeing there?
Well, I'm seeing there's not going to be an immediate effect on inflation. Inflation effects are always going to be delayed, and this is also a discussion we had, for actually the past 20 years since I actually started my career, because I started at the level where this kind of quantitative easing, running the printing machines at the central banks at a higher rate became more and more popular. And back then, I remember for the past 20 years where every year somebody said like, this is going to lead to inflation. It never did. We needed the coronavirus in order to cause inflation. And it was not because there's too much money in the system. It was because there was a lot of demand, but not so much production. So it was a production-induced inflation, actually. People just, paid higher prices because they wanted to build the house, and there was just a limited supply of lumber, for example. And so there's not going to be an immediate effect. when it comes to this. For me, what is going to be interesting in terms of inflation is really tomorrow when we are going to see the release of the inflation data, because I have a suspicion there that the inflation data actually might come in much better than expected. And this is going to be quite an interesting situation. We have this whole potential banking crisis brewing there, but when we see inflation is much better than expected, so what's going to happen then? Are we going to see the markets going up like crazy or going down like crazy? I really don't know, and I don't dare to say at the moment.
Yeah, it's really really hard. A lot of this is almost like, as a trader, okay, I'm in a position right now. It's in a beautiful profit. Super happy with it. You guys who are watching me over the last couple of days will have known I've had an incredibly strong bullish bias as we were dropping down. But at the same time, it feels like one of those ranges where as a trader, it's like, all right, pack it up and just sit on the side and watch, like the risk to reward, like the risk side of every trade is just pretty high, like uncomfortably high, to be honest. It really, but this is also where you can see some of the bigger gains, right? So it's all about, you've got to be looking at what you want to trade, and then also have the conviction. This is the hard part: is have the conviction to stick to it as well.
That's the thing, really. That's the thing. And ironically, I just started a couple of days for Prime XBT, like posting some of my personal trading alerts, and we had some buy alerts on Ethereum, on Bitcoin, and I thought already like, oh my God, what a time to start with buy alerts on these assets. But they turned out to be fantastic trades, of course, which is what I can say now. So yeah, it's like in a time of crisis, of course, it's always easy to say, I'm going to put my money on the sideline. And if you're a beginner, maybe this is exactly what you should do. But if you become more experienced, you kind of notice like that these times of crisis are also the times where the money is to be made. Money is to be made when nobody wants to buy. You're the first one to buy, like you did. I mean, for all that matters, and if you are that brave, of course, you are also entitled to rake in the reward for that.
Absolutely. And one of the things that I noticed over these last days, specifically in the crypto space, is people were incredibly bearish. The bearish bias in the space. It's interesting. We didn't see it reflected in the long and short ratio. The long and short ratio, which is something that I look at, has been heavily skewed long for retail traders and top traders alike since like 24, 25K. But what I've been seeing in terms of sentiment is, every time we get a little bounce, we're up by $500. Everyone's like, yeah, but it's just a dead cat, or, yeah, it's just a liquidity grab and so on. Actually, before I carry on with that, what do you think about this being a liquidity grab? Because it could be that the real direction of the market for now, is down, but we're just doing a little short squeeze. We're taking the scenic route back down to 17K.
But it might be. But if this banking crisis really plays out, again, what is the alternative in terms of investment long term? I want to be in Bitcoin. It probably won't matter, if I bought now at like 20,000, 22,000, or 15 or 30,000. I know you're more referring now probably to the short term horizon. What I would do there probably is, I think the smart way to play this, if you haven't built up a long position right now, is I would actually wait and see if we test the 200 days moving average again. Because
19.7.
Yeah, 19.7 at the moment. By there, you can have a stop loss, like let's say $1,000 under this, but your upside is much, much greater than that. Your upside is probably easy, like 2, 3, 4, 5,000 US dollars, which is a great risk reward ratio. This is how I would play it as a beginner, to make things easy. Of course, there's the possibility that we don't go down there, but you can offset that by DCAing yourself into Bitcoin, which hopefully you have been doing for the last 6 months or a year.
Yeah, absolutely. For me, I've been basically all in on Bitcoin since like 2018. So, that's not changed for me. Again, huge opportunities here. So just make sure that if you are interested in these kind of things, that you're taking advantage of it. Again, literally, whatever you deposit when you use my link down below to Prime XBT, you're going to be getting 7% back as a deposit bonus up to 7K. Free cash. You can throw that into anything you like. Treat it like demo money. Doesn't matter. But if you make profits, you get to withdraw it. Dirk, one of the other things that I've been looking at are the stable coins. Stable coins have been having a couple problems lately. And with the banks going down, I mean, these are big banks that also. So what's interesting about this, right? And I'm only repeating what I've heard from other people, because a little bit of this, I'll be honest, is just kind of going over my head. One of the things I've seen is what's particularly interesting about these banks collapsing and just all the crazy stuff going on right now is that it's for the first time in history related to crypto, right? Like, there's a lot going on with stable coins. There's a lot going on with real world banks. And with, because stable coins, we're looking at the crypto space in general. We didn't really have, I mean, obviously crypto didn't exist back in 2008. So that's one thing, is like, for the first time ever, a major crisis, the word crypto is in the conversation, at least. And then on the other side, the more immediate question I want to ask you is, with these banks that serve, as potentially off ramps for crypto and so on, kind of going down, Coinbase also being affected by some of this as well with, I believe it was Signature. Are we, one of the things I've seen is, well, yeah, if you want to liquidate a stable coin, now you kind of have to buy crypto to get out, you have to at least buy crypto to get out of your stable coin, and then you can look at going into fiat, potentially creating some buying pressure. I don't actually buy this narrative. I think this is a very convenient, it's almost like bro science. Like, it's just a very convenient, like, locker room style talk that, doesn't necessarily have to materialize. But I'm curious to know what your thoughts are.
It's, I mean, yeah, I could say now something like this, that maybe regulators want to shut down off and on ramps for cryptocurrencies. And of course, the thing to do that is to shut down banks who are offering things like this. But this is not what is happening here at the moment, especially with Silicon Valley Bank. Really, in the case of Silicon Valley Bank, it's a coincidence that this bank is also involved with cryptocurrencies off and on ramps. Or to be more precise, the important matter here is that US dollar coin has some of the collateral, like that money that supports the peg to the US dollar, deposited with Silicon Valley Bank. That's why we saw the peg of US dollar coin towards the US dollar going down. I think it was on some exchanges like crazy, going down to 15 cents, or I saw a tweet today, somebody selling like for 5 cents or something like this. Well, it's almost back up, as I see it now at the moment, at 0.99. So out of the dangers at the moment. The reason, of course, Silicon Valley Bank went down is not crypto. It's because they had a lot of deposits coming in, and as a bank, you need to decide, like, am I going to use this deposit to give them out as credits? If I have like leftover money, I need to do something with it. I need to generate revenue from this money. Otherwise, it's going to cost me. So what they did is they bought US Treasury bonds with a lot of those bonds with a maturity of 10 years, where they had a return of around about 1.58 or 54%. Now the interest rates were rising, and you can get now, like, let's say 5% for 10 years. So the bond you bought for 1.54% is, of course, going to be worth much, much less. Now, and this is like a loss you made on something like this. The loss doesn't matter if you can hold the bond until maturity. But if you have this to sell the bond right now, you're going to have to capitalize the loss. And
so are you losing money, or are you still making 1.54%?
No, you are going to, let's say you bought the bond for 100%, and then interest rates went up, and now you have to sell it for 70%. So you lose like 30% of your money.
Okay.
And this is what happened, because there was this rumor that this was going on at at Silicon Valley Bank. So a lot of the venture capital funds that have their money lying around with them, they started withdrawing. In order to satisfy those withdrawals, Silicon Valley Bank had to sell those assets, realizing the losses.
Right.
So it's crazy if you think about it, because what they try to do, they try to invest the money in a conservative way, the most conservative way to think of, besides keeping cash, buying like the most secure bond there is in the world, US Treasury bonds. And this is what was the demise. So, in a twisted way, you probably could also say that the Federal Reserve Bank, with raising interest rates, is at fault of bringing down Silicon Valley Bank.
Yeah, I'm glad you said that because I thought the same thing.
Yeah.
It didn't. I mean, as far as the actions they could have taken, they're not the worst actors in the space.
No, we are not talking about a case, like in 2008, where we had like some managers and banks or departments taking like crazy risks, and like speculating with the money of their clients. This is not what happened here. This is like the most conservative thing you could have done, and still it screwed you.
Damn. Yeah, that's that really says something.
Yeah.
And one of the other reasons it's concerning is we talk about contagion effect and the domino effect here. If that's what SVB did, how many other banks across the United States have across the world actually have done something similar? Because I would have to imagine now that many other banks have exactly the same vulnerability.
I couldn't agree more with you. And this translates also again into what is now going to happen with the next interest rate decision in the USA. Are we still actually going to see interest rates? Are we going to maybe prematurely going to return into the cycle of quantitative easing because the Fed doesn't have any other choice than flooding banks with money? Otherwise, they just cannot survive anymore. By lowering interest rates again. It's so crazy, and so setting off the whole cycle we've seen from 2008 again, new.
Yeah. Yeah. If we do see those interest rates continue to, well, they haven't been dropping, but if we do see them drop, that again is gonna. I just want to relate this back to the very, very basics, just so that everyone's on the same page here. Is that would potentially indicate that it's just cheaper to borrow money and so on, and this is what leads to more money printing, or at least money printing is what leads to this. So that again could lead to just more speculation in the markets. Just more money kind of flooding back in. Okay. So you're thinking the same thing.
It is. It's the same again. We have more money flooding into the market. We have more money searching for potentially assets that are going to give a higher return than the risk-free rate. And so the risk-free rate being the Fed interest rate at the moment. So maybe, institutions, people are going to buy stocks again, are going to buy crypto again. So this is actually potentially something that could kind of initiate the next bull run for stocks and for crypto.
Yeah, it's really interesting how that happens because on one side you'd be like, well, everything's completely fucked. Why would anything go up? But I think it's important to keep in mind that these markets, people are speculating, so everyone wants to be early to what's going to happen, right? So everyone's trying to front run everyone else, and that's why we see, for example, right when you wouldn't expect it, the market starts to turn down, and right when you wouldn't expect it, the market starts to turn up, because we are just trying to be the first ones in. As traders, it's not about what's going to happen today. We want to make the move today for what's going to happen next week.
And that is like really putting, the inflation numbers coming out tomorrow into a whole new perspective for me as well. Because if they are really much, much lower than the forecast, people looking back in a couple of months could say like, okay, this is where it started all. This is why the Fed then started to peak peak interest rates, and maybe lower them sooner than they are saying right now.
Yeah. So, but that's interesting because I believe it was Jerome Powell, making statements about how like there are continued hikes that he is expecting
Yeah.
to make. But what you're saying is that potentially, just correct me if I'm wrong, like that potentially might not happen, and that he
Yeah.
might kind of backtrack on which. I don't know why everyone's acting like when Jerome Powell says something like it's gospel and it's like definitely 100% true. Like I mean, at the end of the day, we're talking about the U.S. government, right? Like it wouldn't be the first time in history that they say something and then do the opposite.
Yeah, I mean, there's the saying amongst traders, never trade against the central bank, and because they have indefinite money, and they can always outtrade you. But for sure, I mean, we've seen the central banks being wrong just recently. We just need to look like slightly over a year back when we heard things like, "Oh, inflation is going to be transitory." We don't need to raise the rates right now because it's going there. Inflation is going to come down by itself again. Well, when it didn't, it went higher, higher, higher. When they started raking heights like crazy, and and maybe they overdid it a little bit to the other sides, And it's
And
always like this. You do something not strong enough. The next time you do it, you tend to do it too strong, you
yeah.
know.
And what you said earlier a few minutes ago kind of sounded like, they increased interest rates, perhaps, yeah, a little bit aggressively, but it almost, in some ways, does not. It sounds like it puts them in a position where now they can, reduce them, and it's almost like they kind of did it on purpose. I don't want to get into like conspiracy theories or anything at all, but like almost as if there's a little bit of alpha that perhaps they had where, like if they can get it up to a certain level, then like they know there's a problem that's going to come in, but they can fix that problem by dropping interest rates. So,
Who knows what is going on there,
right.
especially when we're talking about the USA on a political level.
Yeah.
Sometimes it seems like, personal interest outweighs the public interest. And I certainly agree with you on that. And so that could be something, also could have been a power move, that they thought like, okay, we've been appearing in the public very weak now,
Yeah.
like we don't know what we are doing, so we need to come extra strong through the door now. And yeah, like I said before, now they are overdoing it. But let's see. I mean, it really all depends on what is going down today.
Yeah. And then you mentioned, for example, tomorrow with the inflation data news that's potentially going to be coming out, that we might be seeing some better numbers than what we
Yeah.
expect. What's leading you to say that? What do you have?
Yeah, well, if we can maybe share my
Yeah.
chart here again. I've been following this website for quite some time because when we talk about inflation, the CPI readings of actually no matter what state we are looking at on this world, their numbers always lag behind it a little bit. And this site here, trueflation.com, I'm not affiliated with them in any type of way. So just to say that they are trying to track inflation in real time. Now, what they are seeing at the moment is an inflation of 4.61%. And I think the inflation forecast, if I'm not wrong here at the moment now, is at 6.4%. We need to look this up later, maybe. And so there's a big difference between the official inflation rate and what they are measuring at the moment. And they like to translate this also always into a forecast for the official inflation rate. And they say tomorrow's inflation should be coming in somewhere between 6.6% and 6.1%. Which is, of course, lower than what we are expecting. And this is going to be, in my opinion, very, very interesting. Especially if we have a combination where today Joe Biden or whoever is going to reassure the public, that their deposits are safe, everything is great, the deposits are saved, and you can go about your business as usual, the economy is performing great. And then tomorrow we see inflation coming down, then we really could see this V-shaped recovery of the S&P 500 very, very quickly jumping up to 4,000, 4,100, 200 points. And
I'm so glad you said that.
this is exactly what is going to catch a lot of institutional investors. I'm not talking about retail investors. I'm talking about the big boys here on the wrong foot. I think hardly anybody's betting on that. But this is what I'm expecting, and you please quote me on this next time. And yeah.
I don't look at the news very much, and I'm quite well known for saying that in my little space on YouTube is like I'm just not interested. I'm much more in the camp of show me the charts, I'll tell you the news. That kind of that quote, and I just want to very quickly add my chart on here to take a look at that, because I'm so glad you mentioned the S&P 500 potentially seeing a bit of a bounce up. We've got a great setup for it. First of all, the dollar gap down, which is interesting to see after that weekend close. So we are looking at the dollar potentially dropping down a little bit, which makes a lot of sense because the dollar managed to hit some resistance that we were looking at on this YouTube channel. So that is good to see as well. That's my mum, and so a little bit of resistance here, potentially indicating that we could be seeing some more speculation in the markets, but also the S&P 500, which again, just to remind you, I mean, you're probably going to see this open when you're watching this, but it is at a very good area of support. We've had this diagonal trend line offering resistance to the S&P 500 since the very end of 2021, very beginning of 2022, so a little bit over a year now, and we found phenomenal resist. I mean, it's just such a beautiful, predictable line here. Not only are we getting fairly strong, I mean, actually very, very strong rejections, but they're also quite nicely spaced out, which is one of the key things I look at when I want to see if a level is valid. So really, really nice price action here along this line. And now we're back down here for a retest. Now, obviously, we don't have to find support here, but if there's any setup where it makes complete sense that we at least, I'm not saying we're off to the moon, but at least something, right? Maybe even something small, but something, even if you're bearish. And this is the main thing I've been saying on my channel lately is like, while Bitcoin was down at 20K as well, just a few days ago, just yesterday actually, and so on, I was saying that, like even if you are mega bearish, you're also not, I don't know how to say it, but you're also not expecting just a straight, God candle down to $0, right? Like we're gonna take a staircase, right? It's not always just a straight drop down, and I think that makes sense even with the bearish narrative as some sort of bounce. Just given the technical levels, like this setup was here since before all these banking crises even started to happen, right? The S&P 500.
You can share my screen right now. I have exactly the same trend line drawn into it.
There we go.
It's exactly the same because it was so obvious. Like you said, this was the textbook definition of a downtrend. Lower highs with enough spacing, like you beautifully said just now, lower lows. And now we're in this area where we're testing the whole thing again.
Yeah. And it looks a little bit like we've dipped below it on your chart and on mine. Are you looking at this being maybe a bit of a fake out before it continues up?
Well, I don't know. Are you using a logarithmic chart on that maybe?
Oh, good point. I see that you're on linear. My chart is also linear.
Okay, good. It doesn't really matter by the end of the day. It's not a precise science, of course, when we talk about technical analysis. It's just, the important message here is, like you just said, don't be surprised if we see a bounce of that, like going up again, maybe even another 10%, before we go down again. And I think what you just said now is really, really important when we talk about, a bearish market. Maybe this is actually the expectation of a lot of people out there that say like, okay, we are going straight to zero or something like this, or everything is going to collapse and tomorrow we have to pay with, I don't know, muscle shells, bottle caps,
yeah.
Mad Max style.
Yeah. Just go into something quite. I think it feels like people want that. It feels like it's almost romanticized right now. It's really weird. People want to see the world burn right now. I don't know, man. Again, to me, it's just one of the key things I've been saying on my channel constantly is I've seen practically everybody just pile onto one side of the market. And I also say that the majority is generally, not gonna be correct. The 90% are the one that lose money, and generally when you find that you can put out a little bit of analysis, or you can put something into a little Discord group chat, and you find that everybody agrees with you, you're like, what side are you potentially going to be on? You know what I mean? And again, like just with all the sentiment in the space right now, one of the other things I want you guys to keep in mind is that like if we did see this, potential 10% bounce off the S&P 500 when it opens, there's gonna be 1,000,001 news articles to justify that happening too, right? Like while there's a lot of bearish news articles right now, best believe the bullish ones are preloaded, ready to hit send, right, when the market goes up. It's not like the news agencies know what's going on. They're just kind of giving you what you want to click on, So it is, that's why, especially with the news that we're looking at right now. I mean, when USDC started to depeg, who do you think had the insider information that they sold their dollar, their USDC at the peg, before it happened, right? When you hear this news, when it hits Cointelegraph, you are the last person to hear about it. You're in the majority, but you're the last person to hear about it. So it's a big disadvantage, and that's why I think that using these charts where we've just got really forget the news. We've got a downtrend line that we're backtesting right now, a line that's lasted more than 1 year. It's the most typical setup for a bounce. Like, do we have to get a bounce? No, of course. We can just plunge right through it. But what's likely? Support is support at the end of the day. Resistance is resistance. I think we forget these things when there's fear and uncertainty and doubt clouding our judgment.
And it gives you such a nice risk reward, You can take the trade there if you want and go long. No financial advice, of course. And, you can have your stop loss slightly below that. Your upside is going to be much, much larger. Super. A trade I would take anytime.
Yeah, and you can, because Prime XBT allows you to trade indices, which is very, very cool as well. Dirk, do you have any final thoughts that you want to add before we wrap this up?
Well, I hope, of course, we are still going to be there next week. No, I'm just exaggerating, of course, right now. Guys, in situations like this, and I know in the beginning, maybe I came a little bit too strong over, like in terms of panic. It's a special situation. I don't like situations, where the fate of a world rests on the shoulders of one man, especially if that man sometimes is not very good in expressing what he wants to say. Let me put it like this, dear Joe Biden. I don't want to insult you, of course. And but you have, as a trader, as an investor, as a human being, you need to have a clear mind. You need to be able to not fall for the FUD at the moment, and of course also not on the other side for the FOMO. If you want to trade something like this, make your trading plan and stick to it. No matter what, don't be too distracted by anybody else trying to whisper something else into your ear, whether it be we're going down or we're going up, whatever. You are the master of your own fortune.
Yep. Yeah. A bit of distance. That's what I've been preaching as well. Is there's a lot of reasons that you can take to be, just kind of swept away in the hype. Because a lot of people are, whether it's bearish, hype, or bullish, just getting swept away. But a bit of distance from everything is what will allow you to just kind of look at it and be like, all right, 200-day moving average, support level. You know what I mean? Like, just grounding yourself with facts. Because,
it's so easy though. Why am I thinking of all of that? It was just right in front of me, beautifully laid out on a chart.
And it's so painful when you see it in hindsight because it was very, very obvious back then. But that's how it always looks, right? So
exactly.
So that's important. Well, thank you very much, Dirk. It's been an absolute pleasure again. Let's do this again very, very soon. My viewers loved it last time you were here. I'm sure they will again.
Thank you so much for having me again. It was the pleasure, really, totally on my side. Enjoy this very much and take care, everybody out there.
Thank you.